Alrighty, April PPI. Producer prices. Doc here from North America. Good morning, good afternoon, and good evening. Let's see, what do we got here? Oh, jobless claims also. Jobless claim. Okay. All right, so jobless claims didn't come out. 264 versus 245. Somehow or another, 20,000 just doesn't bother me when you have a country of 360 million or more people. But anyway, that's what that is. We have PPI coming out also. And also we have the same situation is the Federal Reserve seems to have broken the regional banking system. Oh, joy. It's almost like a sportscaster here now. What can the Fed do wrong today? It's not what they can do right today. It seems to be what can they do wrong today. It just doesn't go. It just every day. It's just another, issue by the Federal Reserve doing something that doesn't make any sense whatsoever. It must be politically motivated because it doesn't make any banking sense. It doesn't make any economic sense. It doesn't really make anything more than some type of political dream. So it just goes on and on with us here. I'm still waiting for that PPI. Yeah, so they're just looking at the employment situation. Stock futures had dropped because of regional banks again going into the hole. In other words, there's major banks that you all know about, like a Deutsche Bank or J.P. Morgan Chase, PNC, Wells Fargo, so forth, and Santander, all these bigger banks, and then, or in Europe, you're talking about, Swiss Bank or, I want to say Lloyd's of London. That's an what do you call it? Oh, there you go. April PPI, ex food energy up 0.2% versus an estimated 0.2%. So not too bad. What they were expecting is what they got. So the major banks are different than the regional banks. They're way smaller, teeny weeny little things, And what they've done is the Federal Reserve over the last couple of years has decided to ignore banking rules, and what they've done is they've allowed them to borrow incorrectly, not wrong by borrowing, just borrowing incorrectly and investing incorrectly. And they just haven't been, I guess you could say, audited. They just let them do it. So that's the chaos we have today. Mountain West, yo, what's happening? Robin, hello, and thank you. I saw the email there. Metho, there's Metho. Good morning to you all. What do you got there? So what you have is basically the whole statistical mathematical mean. In other words, all the math that usually makes decisions on investing has been turned upside down since 2008. And every time you try to, or fund managers try to guess the old-fashioned investing, they get chewed apart. Now, this morning in extended hours, we have First Horizon down like 4%. These are regional banks. KeyCorp down 2%. PacWest, another West Coast bank, down 22%. And Western Alliance, another West Coast bank, down about 9%. So that's kind of like where we're stuck at the moment. We're stuck in this situation where there's motives going on that has nothing to do with financial reality. How's that? That's the best way to look at it. And so we just kind of just shake our heads and just say, okay, yeah, we'll let that go on. That's just the way it is. All right, now let's go take a look at the dollar index. As you see right there, it's trying to lift up a little bit. They're a little concerned about interest rates rising, I'm assuming. And also the Bitcoin situation has been a little surprising. We keep on seeing the market try to lift, and then they sell it down, and then Bitcoin, is down. Oh, there's Robin, so maybe you're not hearing me. Can you hear me, Robin? Oh, wait a minute. Okay, let's check the microphone stuff here. Thank you for... Hold on a second. Now stay on the line. Let's see.
Just want to make sure you
Oh no, I thought I was on and I thought I was live. So, said good morning to all of you. So let me just double check my volume here.
It's taking comments.
Yeah. Let's see. I don't hear me. You're right. Oh, I hear me. Yeah, I do hear me. But it seems to be delayed.
There's nothing on the stream. The stream's still showing upcoming stream trading with Doc.
Anybody else hear me or not hear me? I can hear you. Okay, Mountain West says he can hear me. So you just, yeah, just restart your system.
All right.
Thanks, Robin.
Sure. Bye.
Okay, that's always good for Robin to double check that. I like that. So anyway, that's where we're at the moment. It's just a really mixed up marketplace anymore, and it doesn't. And the thing is that most of the stuff that's going on. Let me kill my volume there. And most of the stuff that's going on is not really logical in any particular way. I guess it goes up there with. You could see that we've had the greatest. I guess treachery, illegality by the president of the United States, making Watergate look like just a walk in the park, and American media is not even talking about it. So, that's where we're at this point. It's like as if we've been captured by some type of savages or something like that, some type of evil. All right, let's see. Where can I get rid of that? Dismiss that. There we go. Then let's go over to here and let's check out the dollar index on J4X and Chicago Quant. Right there. As you can see, it's still climbing. Now, no doubt, bonds have been. Let me just show you where we sent out the bonds this morning. We can go take a look at them live. But I can do that by just taking a look at what we sent out this morning. And here's the 30-year. Nope, not that. Let's cancel that and move this over instead. And there's the 30-year. It was trying to rise this morning. And you would assume with banking problems and so forth and sound. Oh, sound is okay now? Good, Robin. Thank you. And thank you for calling. It's always good for you to double check. Keep it up. You can see the bonds starting off this morning were, trying to turn into a buy. The weekly's trying to go into a sell and all, and that's all right. I can understand that part. Just because of this whole flat line, like head and shoulders going sideways consolidation. But now let's take a look at it live. And it's even higher. So if interest rates are dropping in the States, why are they running to the dollar at the same time? Is this another flight to safety? I guess literally the safety is us. Sometimes it's like we are the problem. And at the same time, people run to the dollar at the same time. I'll tell you, if there was ever a case to not be the world's reserve currency, this is it. The thing goes in such weird directions on you, and there's no, there's no stopping it. You know what I mean? It just does that thing on its own. So we got what we really have right now is, I understand that I guess was it Disney is down about $6. And so that makes that, I guess that's like 7 times 6, something like that. So it makes half the down on the Dow 30 down. Just that alone. Whereas the NASDAQ is up for the day. And the NASDAQ is doing what the 30-year bond is doing. It's basically saying that everything's okay interest rate-wise. And then the S&P 500 is pretty much off about a point and a half, nothing major. So, that's the action we're seeing there. Now we go back to, where's that at? Right there. Go back to, okay, so you see that, and you can see even, it's sloppy, but it's close, on that weekly there, on the weekly. Right there, you see that? It's all, I guess we could move that line over. But and you can see there, it's just at the edge, minus 57. That's it. Now over here on J4X, you can see that strength there, and you can see the green right there is at 64, and the yellow is at 50. So the strength is still coming in, which again, with interest rates dropping here in the States, why are they reaching for the dollar at the same time? Those fundamentals have been throwing away. Fundamentals just don't fundamental anymore. All right, and then from there, what we'll do is we'll go over and take a look at the euro. Remember, traders, you want to see something and you don't want to wait, just shout it out. We'll just jump over to it. We're always glad to do that. There's the euro. Euro's being sold off against the dollar for the last couple of days. It's there we are. They're saying stuff like, the Fed has raised interest rates 5% in 1 year, and in a very short period of time. It's from the relationship, like that relative thing, the Al Einstein thing. The amount it moved from 0 to 5% is pretty dramatic. In other words, imagine if you went from 5% to 10%. That's just twice, double. But when you go from 0 to 5%, that's fivefold. That's 5 times more powerful in a short period of time. So it's really hurting the regional banks. That's how they broke the regional banks. Instead of, telling the Congress to stop spending and we'll stop printing and then the inflation will go away, they've done the opposite. And that's what the problem is there. All right, so you can see there's the euro. Let's see what it looks like over on J4X, Chicago Quant also. Hey, Peter, how you doing? I can hear you. Excellent. I'm glad. No, that's all right. Don't worry about it. I get the message, and I'm from the 20th century, and I live in the 21st century. And so we're used to the idea of when you're typing onto machines and so forth, or in this case, tablets or cell phones or whatever, by a computer of any form. We're used to the idea that anything's possible. Spell check decides to do what it wants to do. You accidentally hit a button. Next thing you know, you're on caps. I don't take, let's put it this way. If you did that 40 years ago, people would think, oh, they're emphasizing something. In the 21st century, forget it. It's the machine going wild. Now you can see here, there's the euro. Same situation. The fast has dropped underneath the weekly. It's hanging there on the left side there, down. And the slow is just at the edge on the upside. So, don't be sorry about it. So, you can see there, that's what's going on with the euro. They're running towards the dollar again. Now, what is going on, globally, that they would want to run towards the dollar? And it could even literally be, as crazy as it sounds, and, I know they're not going to default, but as crazy as it sounds, the logic might be as simple as, if there was some form of default, would it cascade into other countries? In other words, people go, oh my God, if America can default, then what's the hope for Argentina ever to pay their bills again? Or what is the hope of X paying its bills ever again? That type of thing. And so it could literally be flight to safety, because everybody knows in the end America is going to pay its bills. And so this weakness in the currencies could literally be that, which is the stupidest thing I've ever heard. But, sometimes it takes something to some of the oddest points of view that's not normal to actually try to understand why we're seeing strength in the dollar when we're the ones creating the problem. I'm sipping my tea after that one. Does that sound wild or what? And then when you see the regional banks having their issues, that could be another reason too, right there. Part of the mechanics of that same reason is that maybe, they put money into regional banks, foreign investors, bought their bonds, and now there's a threat. So now they're selling their bonds in those regional banks and buying American bonds, the government treasury bonds. It could be just mechanics, like I mean, literally fundamental mechanics. And this is the way floor traders have always tried to interpret markets. We refer to ourselves as kitchen table economists. In other words, we know the basic fundamentals. We think that as we used to say, the people in the ivory towers are in la la land most of the time anyway. And when they say something, it's supposed to work like 2 or 3 years from now. And when it doesn't work, no one blames them. Whereas as a trader, if it doesn't work, you lose money, and there is no waiting for next year. And so that's why you get these ideas that can come out of my head or Robin's head or floor traders or old traders. Is that we live and die by the P&L, the profit and loss. Whereas these eggheads, that's what it is. Eggheads up in the ivory towers come out with ideas. Like Mr. Powell, Mrs. Yellen, and the president. 2 years ago, trying to tell us this isn't transitory. This is not inflation. Don't worry about it. Then it gets up to 5%, and they're saying the same thing over and over again. At 9 months later, or was it a year? It was a year and a year and a quarter, almost a year and a half in office. And finally, in May, after he's been in office since January, they raise rates a quarter percentage point. Finally, and they realize, oh my goodness, inflation is here. When you're pontificating and you don't live and die by numbers, you get this stupidity. Mountain West says Egghead was the name Archie gave him on All the Family. Meathead. Meathead he gave him. Egghead is an insult to academics, and meathead is an insult to individuals. Oh no, we used to, when you're standing on a trading floor for years and you have Reuters and Dow Jones and Associated Press and what was the other news source? Reuters, Dow Jones, Associated Press, and Dow Jones. Okay, yeah, there were 3 of them. There was a 4th one out there. When you had them spraying news at you every day, second after second, on big giant boards, 16 feet by 8 feet, things like that, lit up, and you could read the stats and the numbers, and then after a couple of years, you're like, that guy's never right. You see somebody says, X says this about the economy this week. And you're going, okay, what stupid thing are they going to say next? And, and they're up there, pontificating, they're telling you their opinion and how it's going to be. And then we used to refer to them as eggheads. And they were in ivory towers because they surely weren't on the trading floors living and dying by a P&L. And once in a while, you would finally see a company get rid of one of them. They'd be the head economist or something like that. And sure enough, somebody else would hire them. They want the same egghead, so the same level of stupidity over and over again. So, anyhow, this all leads from the question is, why are they buying dollars when our interest rates are going down? And that's where we're going to leave it at that point. So there it is right there. And again, traders, remember, if you want to see something, just shout it out on the chat line. We'll go out take a look at it. I don't have to know why you want to look at it. Just put it out there, and we'll go jump right to a new product real quick, and then go back to the rhythm. Now here's cable. Now cable slid into the sell. It tried it there, but it was still red green, and now it is definitely underneath. But our weekly looks so strong in that. I'm starting to doubt. And they raised it. They did raise this morning too, a quarter percentage point. So let me think. You would think money be running to the cable. They raised their rates. What is it? It's down against the dollar. So I don't know. As Janos would say, is the fundamentals are very fleeting, and they last for about 13 or 14 seconds, and then that's it. They're done and over with. All right. From there, we go over to. Let's put that up on J4X too. Let's put the cable up there. Right there. There it is. Yeah, that pressure's on there, and it's like, really? They just raised their interest rate, and people are selling their currency. Okay, from there, we're going to take a flash look at, where's it at? Right there. GBP AUD. Ooh, good, they're popping it. We keep on thinking they want to pop it. And let's take a look at it over here. We kind of think this thing wants to dig its heels in. But we'll see. Only time will tell in the math. It's both of those together. And we were wrong once. Yeah, look at that. It's digging it in. There's the when. It's really trying to get going again. And that's what we were saying. If you have the wherewithal, you hold on to that wrong. But if not, that's okay. You know, it's the next when is coming. The next when will come. And it's in that weekly buy, and it's showing that strength, and it doesn't seem like it wants to let go. That's for Benny, if Benny shows up today. All right. From the cable and the cable Aussie, we slip over. Oh, and let's just take a look at those numbers. There's 27 on the green on the fast, and 18 on the slow. So we're seeing that strength, and this is going to change into green right there. That will change into green. All right. From there, we slide over to the Swiss franc. We'll put it up on J4X first. There it is. And you can see Swiss has been moving up the last couple of days. I thought it went into a sell yesterday. Just go check that. There it is. Yeah, it did. It slid in. No, it didn't go into a sell yesterday because it was a green and a red. And now it's in the buy again. So it just missed it. At this point, you can remove that even. That weekly is catching my eye in the sense that the fast is flying up and the green is moving close to the zero line. But we've got tomorrow, and I don't really think that they're going to really push us into the buy by tomorrow. So this could be just your classic dead cat bounce. For those that never heard that expression, it means that an object is dropped from a height and then it's not alive when it hits the ground. It becomes dead. And at the same time, it bounces not because it's alive, but it's dead. But the momentum and the recoil, I guess you could call it for some, or you could talk about the density. One dense object versus another, and a bounce, an oscillation, and so it repels against each other on a bounce, just from the force itself. And so we used to refer to that as a dead cat bounce. In other words, the cat was dead and it bounced up. Poor cats. I like cats. But between Schrodinger and traders, they sure do paint cats in a different direction, that's for sure. All right, so that's it with the Swiss. And you can see it does look like it wants to flatten out in here. And we have talked about that. We really think it is going to flatten out in this area. I don't think there's much room on the downside. Let's take a look at it through the J4X. Yeah. Right there, yeah. We kind of think it wants to rest in this area. Maybe it'll challenge the 87s, but we really thought that this is going to be like a resting area for a while. I think they've digested all the problems that were occurring in Switzerland, and you can see it's all cleaned up now. And that's how it looks here too at the same time. A nice flat line. It's just kind of, it may just hover. I mean, it's the summertime. Anything's possible. It could get slow and people just kind of sit back and say, okay, yeah, let's just, let's go to the beach. Let's go to the beach. All right. Where are we at now? Oh, okay. So from here, we go to the yen. There we go. Now the yen, let's put it up on Chicago Quant too. Right there. Now the yen is gaining against the dollar this morning. Go figure, And you can see last 2 days, it's went into the sell yesterday. It's moving down. It's in the weekly buy again, but the fast has dropped underneath, as you can see right there. What else can we say about any of that? Same thing here. You got the green trading at 34, and you got the yellow trading at 40. So it's pressing down. There's some pressure on this product, and which would be really nice. We'd love to see the yen get, I guess, let's see, if there's less yen to a dollar, then it's less inflation for people in in that country. So, and that is that. All right. So, and just an off the cuff remark, not looking at any of these things. The PPI was no big. Oh, wait a minute. Now they're saying the estimation was 3%. It was up only 2%. Oh, I didn't see that before. I thought it was 2 and 2. So actual was 0.2% up, and estimations were 3. So that means that it's backing off a little bit, the inflation, a little bit more. Pac West is only down 19% now compared to that 22%. Just thought I'd give a little yell out about that stuff. These are the things that are influencing the market. All right, and then from there we'll go over to the Turkish lira. There's that, the Turkish lira on that sell thing going on. You can see that's 34 on the yellow, and it's 34 just underneath on the green, the fast. So it's still showing that downwardly pressure. And there's Turkish lira right there. Wow, what a flat line. Trading in all-time high territory. It's trying to bounce a little bit. This is the 5th day in a sell. But we're holding the weekly with no problem. So it's just, more than likely, again, I did see a headline. There is some Turkish news out there. Something about President Erdogan, or as I like to say, it is former Prime Minister and President Erdogan. He is having issues in the campaign, but I'm sure they'll find the votes that are needed. Somehow or another, someone always finds them in a trunk of a car or in the boot of a car or in a box or two underneath a table somewhere. That somehow or another they find them in the end. But he is up for election. I'm just taking another sip of that tea. There we go. All right. So, from there, we go over to the King Peso. We saw that thing roaring yesterday. There it is right there. This is going to be the powerhouse in the bricks right there, the peso. King Peso. And it's gaining against the dollar nicely too at the same time. When this goes down, it's gaining against the dollar. And you can see it's been in a daily sell for a bunch of weeks now. And same thing on the weekly sell. We've been in over a month now in a weekly sell. So there's been, pressure. They've been selling dollars and buying pesos. That's like the brick play. So when you don't want King Dollar, you buy King Peso. All right. Now from there, we're going to slide over to two products that kind of follow the commodities. We do this every day. We mention it, and that is Canadian against the oil. That was my teacup. Let's put it up on there. Right there. There's Canadian kind of moving up, so I wonder if oil is down for the day. And that's what we're seeing right there. And let's go check out oil over on J4X. Yeah, it looks like it's down a little bit for the day. You can see that there. Yeah, matter of fact, it's down a couple dollars, isn't it? I think it was trading in the 73s last night. So we're seeing oil down. Let's put it up over here. Yeah, it's going into the sell, no less. So that's usually the way the Canadian works. It's about 70% of the time, if not more. Basically follows oil pretty well. We used to follow New Zealand CAD. That was usually a really good player, but I guess New Zealand has been doing some strange economic things, so it doesn't function as well as it used to. And then what we do is we go over to the South African Rand. And we'll put that up on the screen. And the South African Rand right there. Oh my goodness. The gold must be falling. Yeah, how can the world be in a calamity if they're not buying gold? I mean, honestly. Something's really confusing. And so this used to follow, this was a leader of gold all the time. Now, I'm sure gold is down, so let's put it up on J4X. Just because of that move alone. And there it is right there. There's gold. And it looks like it's... Is that up? Let's go. I think it's up. And let's go check it out over here. There we are. Yeah, look at that. Gold is up today. So as much as it was in a minus there at one point, it's flirting. They're running back to gold, that's for sure. And they just don't want to let it go. It's still in that weekly with no problem. And they made almost did they make a new low from yesterday? Yesterday's low was 2040. What is that? Remember, this is the June contract, so it has premium over spot. Low yesterday was 2028, and today's low is 2026. So it made a new low, and now it's high for the day. And then, just for interest sake, we'll take a look at silver. Now, silver is not joining in at all. Silver is off about 50 cents for today. Let's see, how much is it down? 54 cents, 56 cents. So we're not really seeing. I guess they're running towards gold and they're buying dollars. That's a unique thing in its own right too. Talk about an upside down pairs trade. So from there, let's see. That does it, I guess. No, yeah, we done the rand. That's what we were doing. We were just looking at the rand. The rand is really spiking up. It's trying to tell us that gold wants to go down. Silver's going down, but gold is not. So, meh, as they would say. What else can we say about any of this stuff? I guess just follow the individuals and not try to play the arbitrages, Okay, so from there, we will go into the metals and go back to the silver and just take a look at that, and then we'll look at copper. And there is the gold, silver again. You can see there. So they're putting pressure on that, and it's actually how about that? They're threatening the weekly. I didn't even see that this morning. That damage is really becoming aggressive, isn't it? Look at that. The weekly is even threatening. Oh, I'll tell you, what a sad event. Silver just cannot get. Gold is almost on the edge of all-time highs. The future contracts are touching all-time highs, and the silver is 50% off its all-time high. Wait, it says one or the other. Silver is way overvalued, or gold is the best. I guess the best thing to default to when in trouble. It's one or the other at this point. And it's not exactly a pairs trade there. How did I say that again? Silver is way overvalued, and gold is the ultimate when it comes to running to like a Bitcoin in a sense, All right, now from there we go over to copper. There's copper. There is noise out there this morning about China. China's not. I saw a headline. Let me see if I can find that headline. It was interesting. The headline said something about can't count on China to bail out world yet, or something like that. It was some odd thing about the economy's not really getting going. Let's see, Dr. Google. No, let's see, future slide. U.S. inflation. That's what it is. U.S. inflation resistance delayed while China recovery stutters. That's what it is. The stalling recovery in China delays this, which will ultimately make it easier for the Fed to cut as the problems for the economy face continue mount. So in other words, they're going to try to bail out China now. Okay. Oh, man. This is definitely crazy times. Thank goodness we have our math. All right. From where are we at? We're on silver. So let's put copper on there. There it is. Oh, Trumpy said something last night. Wow. All right. So there's copper. That must be the China thing. Yeah. There it is, right there. And you can see that's a big move. We talked about that 2 days ago, thinking that maybe we're going to see what the 60 area. We're at 69 now. Wow, that's something. I said that yesterday. I think it was. With the action in it. I was like, we could see ourselves like 58 to 60 something. Look at that. Wow, that's a real smack in it. They're really putting some punishment into the copper market. Well, the Fed will go bail out China, and that's as the at the same time America is talking about not raising the debt ceiling. Talk about insanity! Oh my God! Ugh, crazy times. All right, from there we go over to the platinum. We'll take a look at the platinum market. That kind of gives us some good guidance. We do get when you're looking at the metals complex, platinum does a great job at just telling us where things are. There you go, right there. Look at that. It's holding up still. It's been in a buy since back here, and we're in that weekly buy now for a month and a half, almost 2 months. Since the last week of March, and we're in the middle week of May. So, that's yeah, that's pretty good. There's some real good strength in there. I'm hearing other news at the moment, it's just making me laugh. It's so stupid. All right, now from the metals complex, unless if everybody feels comfortable, we'll jump over to the energy complex. And there we did see that when we were looking at the Canadian. Oil is off almost $3 from literally. Well, geez, the high today even was 73.50. So 73.50 was the high at one point. It's trading at 71.40. So it's literally over $2 off. We'll put Brent up on J4X. All right, there it is right there. You can see that little rollover. And at the same time, we can put a little red line in there, like so. There's a great potential for it to be going into a sell today. It's not there yet, but it's if it closes below it, we're in a weekly sell anyway. So I mean, in the end result, we know one thing for sure, and is that move that came is not something you wanted to trade on the upside unless you were doing it through options or binaries or things like that, so you didn't get stopped out. All right, now we'll go over, and you can see here Brent is trying to lift up a little. No, I'm sorry, Brent is down also. Brent's down $1.90, and where is my data? There it is, right there. The slow algo, or in this case here, the stochastic, is trading at 75, and the fast is trading at 77. Is that where it's at? 78. So it's just still showing some strength in there. Whereas you can see our work is already J4X will catch up in about an hour and a half. And you can see the strength is rolling over here now. All right, from there we're going to go take a look at. We'll put West Texas in there, like so. That's the front month that we're watching on the June there too. That's what that is. It's the front month breaking down, and you can see the green is at 80, and the yellow is at 81. So it's breaking down there. Now let's take a look at the back month of September. We go out and get a better flavor for what's going on, the demand, the supply and demand for front or right now versus a couple months from now. And so it's trading at 70, 82, or 85, either one you want to say. Let's say so 15 and 15. It's about a 50-cent difference. A little more, maybe 48, or a little less, maybe 48 cents. So this thing's been coming in. So the back months are holding up much firmer from that $1.50 difference at one point. All right. Let's see. Okay, so there is natural gas. Let's put that in. And that's the front month here in the States, trading at $2, not $21. $2.19. And then over here, let's put it up on this. There is the nat gas. And, oh, there you go. Benny and the Jets. Dun, 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 dun. Look at that. Look at the RAN. Oh, and look at the GBP AUD. Right there. Smackaroo. Getting some legs in that puppy. Look at that. Jumping through, getting ready to do another win. This is going to be fun. Another win. So here we go. And you can see the weekly's holding up really nice there on our work. Oh, pretty good. I'm really confused today. This is one of the weirder days I've seen in a while. They're buying dollars. They're buying gold. They're buying bonds. So is that like flight to quality? Is that what that is? And they're selling everything else. Even silver is getting smacked down like 50 some odd cents, and gold is actually holding up. So it's like, what is the malfunction there, huh? Yeah, we'll see. One thing's for sure is it's back where the when started. So that's good. But we'll see how they. We're in that weekly buy, so it keeps on trying to tell us that the pressure is on the upside, and and then they raised the rates over in Britain a quarter percentage point. What do? They sell down the pound. It's like, what? Wait a minute. So it's like everything Giannis says and has done with the webinars about fundamentals and how to trade them is so true. It is fleeting all the time. Nah, not at all. And then at the same time, when we look at the stock indices, we have the Dow Jones down 200 points. We have the S&Ps down 15 points. And we have the NASDAQ up a couple points. So, the NASDAQ is interest rate sensitive. And it's the leading companies of world commerce at the same time. So in other words, it's the best of the best, and so it's and I just heard a new stat. You'll love this one. The stat is that professionals have never been more short in bonds and stocks ever. Now they're not telling us how many calls they own, or how many. Well, it wouldn't be. Yeah, it would be puts, or it may be puts short. Let's see, I guess if you sell it, if you sell stocks short and sell puts, it's somewhat of a straddle. It's a limited, with a limited gamma. But if you short stock and buy calls, it's a pure straddle. So maybe that's what's going on. Maybe they're selling, with interest rates at 4 or 5%, they may be getting 4 or 5% on their I don't even know what the broker call loan rate is. I haven't looked at broker call loan rate. If anybody out there knows what the broker call loan rate is, just put it up on the line. Let me look it up. I have not looked at broker call in so long. The days of me being short 50,000 shares of this or that and so forth have been so far away. I'm just pure option guy now. Let's see, broker call loan rate. Let's see what that is. That will make some sense. Broker call loan rate. Let's see. When is the call loan rate? No, not when. I want to know what it is now. Call money markets rate. Broker call, also known as call loan rate. Let's see. Where's it at right now? Broker's call defined. Call loan rate definition. No. I just want to know where is it at right now. Where is broker call loan rate? Let's try that. Let's see what that says. 7%. Okay, that makes sense. Yeah, so in other words, you could get maybe 6% on stock. So you short the stock, buy calls, and you're getting 6% on the stock. Okay, interest. So if you sell like I don't know, $50 million worth of stock short, you can generate 6% off of that, and then the 6%, is paid, and then you have to worry about the dividend. And if you buy calls against that at the same time and turn it into a straddle, then you can trade it at the same time. So that could be part of what we're seeing, why they're so short. That might be just a guess. It's one of the old tricks we used to do when I was young. I have a New York accent? Okay. Hey, yo, hey, yeah. I thought I had a Philadelphia accent. I have a southern New Jersey Piney Hollow accent. I'm from the Pinelands of South Jersey. I'm a piney. When you say the word calls, hear it. Oh, really? Calls. Oh, well, I guess that's a city word, really, calls. And I traded in New York, for many years. And traded in Chicago. And traded in Philadelphia. So I guess I pick up some... Hey, yo, give me a call, huh? Hey, yo. Like my yo? Yo, forget about it. It's kind of like a nasal thing, isn't it? All right. Yeah, so if broker call loan rate is at 7% to borrow, so if you short it, more than likely you get at least 6+%, and the best bond is yielding, what, 5 some odd percent? When I say calls, how about that? Hey, yo. Yeah, when you buy calls, I don't know. Sounds cool to me. Anyhow, where are we at this point? Let's jump over to... That's the when, Benny. There's the when. This might be the day. If it closes here, it's definitely the when. So let's do this. I'm going to make another copy of the when and put that right next to it. When 2, we're going to call it. Or when B. How about that? Paste. When B. There we go. All right. What else can we say? I guess that's about it there. So let's dance our way over to... You like that? Isn't it amazing how many technicians, are willing to be hung out to dry like me? Honestly, there's not many technicians that I live and die every day by my math. Every day. You know how hard it is to be right, and I'm right a lot. So, but not this one, Ben. And I guess we're starting to become right. How's that? But we'll try and see. All right. So from the broker call loan rate, what else can we look at? What was I looking at? Wasn't I looking at natural gas? Let's finish off natural gas. Yeah, there's natural gas up there. Let's go over to Spain and see how the natural... I can't believe the thing's in the 28s with ours trying to touch the $2 area. Ugh. All right, let's find the oil company down in Spain that gives us a good idea. It's probably like 28.3, 28.4, 28.4, 28.3. There you go, right there. It's hanging out in that area. Real disappointed that it's not at 22 or 23. I mean, wow, $28.40 a cubic foot. Here in the States, it's $2.19 a cubic foot. What an arbitrage. I might have to think about that. It's unfortunately it's so political. If it wasn't so political, I would definitely jump in. I'd rent a ship and do that. I'd find a ship and get it done and ship stuff over there. But it's just there's so much crony. I call it the crony fascist capitalism thing going on, where it's not open markets, and that's why people pay $28 instead of $2 or $3 or $4 right now. All right, from there we'll go over to stock indices, and we'll be able to give you a good idea how it's been acting with a short-term chart right here. You can see there, since we started the webinar, they've sold it down from the 4160s area down to 222. Oh no, I think they started doing it earlier when we started the webinar. Let's see, where's that? That's 738, and we're at yeah. So right there, we started the webinar here in the 4150-ish area, and we've gotten down to the 4136 area. We're back to 41, and so you can see that pressure. We went into the sell here too, and it's been down. Same thing over here. Went into the sell there in the 50 area, and it's been down. So that's the S&Ps. Let's take a look at the actual S&P itself. There's Nat Gas. There we go. And you can see there it is. We're still in the daily buy with the June futures contract. Still in the weekly buy. The fast algo is underneath by a hair, and the slow is still above. So something to be concerned about, but we'll see how they play out. Today is Thursday. By Friday, anything's possible. We'll see what they do there. Then we can go over and look at, say, like the Dow Jones Industrial Average, which it's down at about a 0.5 percentage point. Nothing major, right there. It closed in the daily sell yesterday, and it's in there again today. And you can see the weekly is pressing underneath again. Right there, and so the granddaddy of them all, of the stock indices, they're pushing down. And then what we're going to do is we're going to go over and not take a look at Tech 100 since we already talked about it, but let's go take a look at the Russell 2000 right there. They were taking it up yesterday. I thought that was trying to be like an all clear sign. We were getting some life into it. It was trying to get into the weekly buy. You see there, it rolled over. We're underneath again. If this thing takes off, it's kind of like platinum. It kind of gives the insight of where speculators are. And since we have stats that are showing that professionals like hedge funds and so forth are short enormous amounts of underlying product. In other words, the hard delta in both bonds and in stocks. So I kind of doubt that they'll be right, but anything's possible. But our math is trying to roll over, so we'll see. And then at the same time, there's going to be people walking around going, short interest is at such a ridiculous level, you can't be short. So it flips back and forth. One moment you're like, wow, be long, and the other one is like, oh my God, if I'm long, I might be wrong. It goes back and forth on both. I myself think that this is, I think in many ways this reminds me of the 1960s, where they were waiting in the early 1970s, where they just waited. It was a big consolidation. They had made all-time highs to the 1,000 point on the Dow, and then they back and filled all the way down into like the 600 area, like a 40% drop. And at this point, where our all-time high in the Dow is like, I guess we're about 20%, something like that. Nothing major. So it's not the most, it's not even 20% because you got to figure all-time highs is in the 36,000, 37,000. Let's see if we can put it up on here. Let's put it up on J4X, but it's not that far off the all-time highs. Right there. We're going to throw the weekly in there. I mean, a year ago, about a year and a half ago, it was right up in there. I think. Well, right around the beginning of the Biden administration, I think. Yeah. So at the beginning of the Biden administration, at the end of the Trump administration, the all-time high was almost 37,000. We've traded down to 29, 28. To be down almost 50% would be like 17, 18. Let's say 18, 19, 20 maybe 20,000. We're not. We've never really gone to visit that, but once during the COVID situation right there. So I'm not that bearish at all. I'm not super bullish. I'm just following the math. All right, traders, we're out of here. Markets get going for me in 4 minutes. So happy trails to you until we meet again. Happy trails to you, to all our trading friends. We'll see you tomorrow. Tomorrow is TGIF. Thank goodness it's Friday. I got a lot more farming to do. I was out there at like crack of dawn farming. I was on there on the tiller, chopping ground, the whole bit. All right, ta-ta for now. Oh, thank you, Benny. What indicator do you use? Well, I use my own proprietary for the last 45 years for the weekly and daily. But you see this here on J4X? You can emulate it by commingling a fast stochastic, which is the green, and the slow stochastic, which is the yellow, and it's the D. So I'm going to show you this way. You can go back and look at it. There's the slow, okay, and then this is the fast. You'll be able to go look at the recording. And there it is there, and we're just following the D on both of them, and we've blacked out the invisible the other, the K, and watch how they compete against each other. And then at the same time, we use the Hinky-Ashke bars up here to be like an averaging thing on it at the same time. And so let's edit indicator input. There's the Hinky-Ashke, and that's why we call that the Manhattan indicator. That's a combination that I put together from an old physicist that told me what they used to do when they were building the bomb. When they weren't building the atomic bomb, they were playing with the market. Anyhow, that's what that is. Catch you later. This is Doc saying arrivederci.